Hi there, this is Kirsty from Up Loans. Today, from the gorgeous location of Townhouse and Loft, I am going to talk to you about lender's mortgage insurance. I know, that's why everyone goes away to a fancy Airbnb on the weekend, isn't it? To talk about LMI. But I feel like we've got articles on our website about LMI, all of our brokers talk to people about it, but it's still a topic that's not that well understood. So I'm going to take a couple of minutes today, try and drill into it a little bit deeper. So when I'm talking about LMI, I'm talking about lender's mortgage insurance. Now the key thing in that is the word lenders. It protects the bank. It does not protect you. I know a lot of people get lender's mortgage insurance thinking, oh, if I have some issues later on down the track, that will help me. It doesn't help you, the borrower. It's insurance that the bank make you take out against yourself to protect the bank. If something goes wrong and the loan doesn't get paid, the bank's the one protected, not you. The lender's mortgage insurer will still come after you. So it doesn't offer a level of protection for you. So first of all, because it doesn't actually protect you, let's talk about how to avoid it. In most cases, to avoid lender's mortgage insurance, you need to be borrowing 80% or less of a property's value. So for example, on a $500,000 property, you need to be borrowing $400,000 or less. Now, what's a really good rough estimate on the fly to try and work out what that is? First of all, it's not 20% because it's 20% plus costs. So if you're out at a property and you want to work out how much cash or equity you need to be able to grab hold of to be able to get an 80% loan, think really roughly in your head about 25%. We'll work it out exactly for you, but on the fly, that's a really good rough estimate so that you're covering stamp duty and things like that in the mix as well. Now, lender's mortgage insurance at 80% and above applies for normal folks, probably like you and I, but there are some professions that can actually avoid lender's mortgage insurance at higher percentages of borrowing. We call them LVRs or loan to value ratios. So there are some professions that can avoid lender's mortgage insurance borrowing over 80%. The key one is doctors, but there are a number of others as well. So if you feel as though that might apply to you, unfortunately it doesn't apply to mortgage brokers, but if you feel like that might apply to you, have a chat with your broker about it. And also remember that ways to avoid lender's mortgage insurance don't necessarily need to be cash in the bank. If you have a great deal of equity in another property and we can keep both properties at 80%, there's ways that we can utilize equity as well as cash to get you there. Now, if you are going to need lender's mortgage insurance, let's talk about different things that happen once you go over 80%. So many banks will go up to 90% borrowing, some up to 95%, and a couple above 95%. Some will go above 95%, adding on the lender's mortgage insurance. When you're at that super sort of high borrowing level, what you've got to understand is that if the bank that you're going to will do something that most other banks won't, usually there's a fee or charge associated with it. So for those banks that will let you borrow 97, 98% of the property price, yes, they exist, but the interest rate is usually higher and there's usually some higher fees and charges associated with it. Now, most of the major banks will go up to 95% borrowings, but as you get further down the borrowing ratio, closer to that magical sort of 80% figure where you're deemed low risk by the banks, the percentage of lender's mortgage insurance will decrease. So just keep that in mind. If you're at like 91% borrowings, including your lender's mortgage insurance, sometimes only contributing a little bit more cash, finding it from somewhere, can actually mean that your lender's mortgage insurance goes down quite significantly. So that's something to talk to your bank or your broker about, actually going, okay, I'm at 91% borrowings or I'm at 87% borrowings. What happens if I get it down to 90 or 85? Because there can be some really big drop-offs in regards to that. So key points to remember. Lender's mortgage insurance usually applies when you're borrowing more than 80% of a property's value. It doesn't protect you as the client, it protects the bank. If you default on your home loan and that home loan has lender's mortgage insurance, the bank is protected, you are not. So it's still really important to look at insurances for yourself outside of that. And number three, there are certain professions out there that do have the ability to have no lender's mortgage insurance at higher borrowing ratios. If there's any questions or queries that you have about lender's mortgage insurance, just let us know. That's what we're here for. I'm going to point to my fantastic 9-year-old assistant who's going to turn my camera off. Please reach out if we can be of any help.